So today we are talking about maybe the biggest turnaround stock of the century, BlackBerry. And who doesn't know BlackBerry? Now all the millennials watching are like, what the hell is BlackBerry?
Isn't it not a fruit or something like that?
So BlackBerry once pioneer and market share leader in business phones, and they controlled over 20% of the mobile phone market back then. Now they are almost making nothing from hardware, and the CEO is saying out loud that the company is on the tipping point of the turnaround. So all about it here in this vlog. Alright, if you are new here, which you probably are, make sure to subscribe to have daily breaking news on stocks, stock market, finance and business, money. And also, if you are returning, make sure you thumb up this video. Thank you very much for watching and to come for another video. So today we are talking about BlackBerry, as already said in the intro, and today we are jumping first in the history and then to the future. So BlackBerry, in its peak 2011, BlackBerry sales reached almost $20 billion revenue, guys, and 82% from it was hardware sales. In the current fiscal year, the goal is to top 1 billion. So you know, so they just think about those numbers. So from 20 billion to 1 billion, this is a really shame for such a traditional company. But you know, this happens when you are not, you know, and on your top of the game. If there's new technology coming, if there's revolutionized companies like Apple coming up with a better concept, and everybody follows except BlackBerry. So the stock was at $146 in 2008 and is now around $7.5 per share. Just for consideration, so actually they had the peak of the stock around $147 per share and dropped to $7.5, and this was 2008. Just for your information and reminder, 2007, so 1 year before that, the iPhone was released. So you see how fast something like this can happen. So let's dive first into the stock of BlackBerry and see how the valuation and all the numbers turn up. Alright, if you're looking into the stock of BlackBerry as of this recording, we are around $7.5, and this sums up to around about 4 billion market capitalization. And if you are taking now a look on the PE ratio, it's almost at 50. Now this sounds a bit high when you consider other companies that I already vlogged about, but it can also be if the company is just getting profitable, that, you know, this PE ratio can be quite high, because the stock price is already pricing in, you know, future gains, and they just get the first little earnings. So you see the imbalance over there. This can happen. If it's really the case into BlackBerry, we shall see in the next couple of factors that I looked into for you. And the stock price year to date, so from the 1st of January until today, in September 2019, we already gained 5%. That's compared to the general market, not that much, but now one of my favorite metrics. So if we are looking into the PS ratio, price to sales ratio, we are around between 4 to 5, which, you know, compared for example to Apple or Amazon, which are already below 4, is a little bit high. And if you're looking and comparing it against Google, for example, they are around 6-ish. So you see, it's okay for a technology company. They are now into the cyber security business mostly. But if we are looking back on this company, like 2015, 2015 they had like a PS ratio of just 0.8, which would be ridiculously cheap, and they are actually rising in the comparable stock price in terms of PS ratio, so they get 5 times more expensive looking into this metrics. And this is one reason, because the revenue just keep on dropping, guys. It's unbelievable. From 2014 until now, it's about 85% of revenue that just don't come in and at BlackBerry anymore. So they have a really tough time as a company. But there is the CEO, John Chen, who want to turn it all around. So let's look into this man who want to do right that. Okay, so in general, turnarounds are very attractive. Why? Now comes a lesson that you should definitely take a note. Make sure to thumb up this video and subscribe if you're not subscribed to this channel yet, because I'm vlogging every day. Now, let's say we have a stock that is at $10. Now, let's imagine this stock loses 80% of its value and goes to $2. Now, this $2 would be very hurt if you are invested at $10 per share. But now imagine you see this company and you see there's a turnaround going on, and you invest into this $2 per share. Now this $2 becomes back 10 because, you know, the company found the secret sauce to success, and which would be for the original investor a plus minus business, because, you know, he came from 10, went to 2, lost 80%, went back up to 10. If we don't change any share numbers, then he became 0 rich over the period this all happens. But the investor that put his money into the $2 per share, he actually gained 500% just that the stock returned to its original stock price. So that's why turnaround companies and turnaround stories are very attractive. Now this guy, John Chen, is the new CEO of BlackBerry. And the question is he really able to turn around this company, and has he experience? And yes, he does. So actually he was CEO of a company called Seabase, and they were really struggling against Microsoft and other big companies into the database system and business. And he saw that, you know, Seabase had a really good core business, which was that creating very less data for a complex project. So whatever, you know, Microsoft programs needed 20 MB, they could do it in 100 KB. This is like not even very small percentage of the 20 megabytes. So you can see the advantages of this core business, and he developed it further there. He built applications and databases over there, and he was successfully selling the company for not less than a stunning 5.8 billion US dollars in 2010 to SAP, the German software company. So you can see, you know, he turned so many things around, and this is what he want to do also with BlackBerry. So he see the core business into cybersecurity. They are going big into cybersecurity also, while, you know, concentrating on Internet of Things, which is a huge growing market. And they are also already, or the products of BlackBerry already inside 150 vehicles, and managing the encryption of end-to-end services. So this is where the focus is, and you know, this is something that he sees up to 23 to 27% gain over the next year, which is, you know, very good for a growth company. And so with all this information, should I invest in BlackBerry or should I not? Let's have a look on the summary. Alright, so you see that the company stock stock is on the higher side of the valuation according to my favorite metrics. So just based on that, I would not invest. But you know, if you're watching this channel, I'm also a growth investor looking for value. And I think when they are saying that they are growing 30%, and if you have this every year, you will triple your company and revenue and maybe also the stock within under 3 years. So this, you see, there's this, you know, risk and chance,
Risk and chance, risk and chance, risk and chance.
and you have to decide. But according to these numbers, you know, for me it's a bit of a bigger valuation, and I think I would consider the stock only when it's dropping down. You know, it was cheap in 2014 when the PS ratio was very small, but even there you see the stock price just went down because the revenue went down. And of course, you know, this is something that, you know, it's really something, you know, revenue is the bread and butter for a company. So if you're losing like 85% from your highs, the revenue, it's not good. So I think I would give BlackBerry a little bit more time to, you know, get specific and see how it is further develop. Make sure to subscribe, because if I invest or think it is a valuable company to invest, you will definitely know here immediately on this daily vlogs. Yes, I'm hustling daily to deliver you the brand breaking news content every day. Thank you very much for watching, and see you tomorrow.